Hello and welcome back to Dukascopy TV. Well, in the studio today, I'm delighted to be joined by Mourtaza Asad-Syed. He's the president of ISAG. Mourtaza, welcome back to the studio.
Thanks for having me.
Now, it might seem like a bit of a silly question, but to have the president of ISAG in the studio, I've got to ask you this. What's the biggest hot topic for you right now in the markets?
The hot topic of the marketplace is in Geneva is Russia. Last time we discussed, we gathered together for the roundtable. The strategists in Geneva really dissent on Russia. There was a lot of talks on QE, on the global economy, on the markets, on gold, but really where the focus point, where the debate were more intense, was on Russia, with people really thinking it was once in a lifetime opportunity of buying a cheap market in distress. Others that would be much more prudent and would be even sellers of Russia. So I would say it's the topic of the day. We know it's geopolitical focus, but on the market, really, this is where there is intense debate and I think really interesting action.
And that's quite refreshing as well, that it is, as well as that obviously there's geopolitical issues in the news at the moment, we know that, but also the fact that you're saying that, you know, there are other areas in Russia now worth exploring. That in itself is interesting and a refreshing look. Equity buying and selling is a key topic right now. Is that something also being considered when you're looking at Russia? Is that still a big factor in Russia for you, an interest?
I think Russia has three kind of assets that everybody will look at. Equity market, being listed outside or inside Russia, bonds. Many bonds from banks or commodity companies are being traded and open for investors, and it's a big market, especially for private investors, and the ruble, the currency. But really, starting at the assets, bonds and equities, they've been in favor for the last few years by many investors because they were yielding a lot on the bond side, and people tend to forget about risk of emerging market investing. Now they got back this reality with some losses on the bonds. What really was, I would say, maybe neglected, fortunately, by private investors were stocks. People would invest in Russian stocks on the basis that it was very cheap, and one day it would re-rate and have a expansion of multiple and capital appreciation. This didn't happen. On the contrary, we see why maybe the equity was cheap. It was the risk premium on the market was in fact real, and the risk, I think, is not yet fully appreciated by the market. I think there is a distortion in the market right now between outside investors being really fearful of Russian assets and most of the big companies in Russia being listed outside, like in the US or in London, felt much more than the Russian domestic market, which is mostly now held by domestic investors. So the panic or the covering of position on the equity market for international investor was very quick, and this led to depreciation in the ruble and depreciation in the stock market. There might be rebound, there might be short-term rebound of oversold positions, but it seems that the crisis is not going to be solved quickly.
We'll come on to look at the ruble in a bit more detail in a minute, but why is that? Why is there's been this fear, and why Russia? I mean, we've seen a flight of capital in Russia, like we have seen with some of the emerging markets out there. But you mentioned just there in your last answer, there is this fear, and yet I asked you at the beginning, what's the hot topic, and you say Russia. So why?
So, topic, I think the dissent in the marketplace is about Russia, and it's, let's say, split 50-50, maybe more pessimist than optimist. My view is that aside from a short-term rebound, the Russian market has proven to be much more riskier and much less attractive than we thought it would be like 2-3 years ago. For a simple reason is that when you have a country breaking international laws or acting this way with clearly, I would say, a kind of autocratic government, you also fear for the private investors, the protection of foreign investors. If a country doesn't respect international law, what about the law of business and law about capital property for international investors? And that was the key point for many investors for years. A Russian company would not distribute dividend. The Russian company, they have a PE of 4, which is absolutely cheap for any standard. The issue is those earnings never got to shareholders. So there was an issue of corporate governance in those companies, not being shareholder friendly. But if the government itself is not complying to international laws, you can question yourself about, are you going to see the color of your money? Not even the dividend, but really the return of your capital. And I think this raised an issue about how Russia is treating investors, how Russia is playing the international game. And this is not very pro-business, I would say.
And that explained the flight.
That explained the flight to quality, and especially the big risk aversion on all Russian assets being listed outside. But this, I would say, short-term event, but it really brings the fact that over long run, Russia has a very long way to go to really comply with international standard of safe investment, or at least proper investment with returns. And this brings me to the other issue of long term. I think what happened in 3 months really jeopardized a lot for the next few years. How Russia was expected to open up to market, to open up to international standard, and will depress the valuation of its asset for at least 2-3 years. Regard to emerging market, as you mentioned, is it related to emerging market outflows? In a sense, yes. There is this panic, of course, linked to the crisis, but overall, return on capital from emerging market have taken a beating for the last 2 years.
They have. Okay, Mourtaza, we'll just finish on a quick look at the ruble. You can see there. Are you seeing some of what we discussed to say? We're seeing some of that echoed out here in the ruble. Talk us through just a little bit about this. This is actually looking over the last 3 months. What do you see here? What do you see from this graph, and what is some of the reasoning behind why we've seen this height above 36 there, and then we've dropped and we've started to rebound here?
I think the way up for the US dollar ruble is, of course, the escalation of the crisis. The pullback, I think, goes in the idea that there was oversold position, as the ruble is the easiest way to short the market instead of selling, and shorting the assets which you might not have, or being short squeezed. The currency market is still the best macro play, the most liquid instrument to do macro. And I think there was some overselling of Russian for risk aversion from foreigners. Then this, I would say, maybe natural pullback and maybe normalization, expecting Russia maybe to play fair and to comply to international pressures. And we see now, I think, the move up, the drift going forward.
Okay, Mourtaza, that's all we've got time for, I'm afraid. But thank you very much for coming into the studio today.
Thank you.
As I mentioned, that's it for today. Join us tomorrow, though. We'll be bringing you more interviews and updates. But for now, from me, bye-bye.